Yeah, I think everything is working now. Should be live and should be good to go on Divergent. And so let me just type here, live on all three. So good morning. It's I see here that my last stream was on the 24th of June, and then I went to Macau to participate in an event together with Al Brooks and his colleagues. And then I came back and was severely jet lagged, as were many others that were there and that traveled back to Europe. And Andy then kindly took over, and I wasn't able to stream yesterday as I had planned because I had some hospital appointments, but it seems all is now good to go, live on all three. And the markets will open in approximately, well, shortly. And we have a very neutral open in the DAX. I won't be doing the espresso this morning, not for any other reason than I don't have time for it. I can mark out the areas, and I'll happily do that now. So here's the high. So we'll draw a box, 17 points, and 17 points. So espresso long at 146 and espresso short at 086. So good morning, ladies and gentlemen. I hope that you're well and that I come through loud and clear. We went as low as 87, and the market actually found buyers there. The overnight range is relatively range bound. If we measure the swings of the overnight range, we have a push of 60 points higher and about 80 points lower. It seems as if buyers stepped in down by the first swing low from the early morning trading range. Looks like we're going to have a FTSE first bar negative, so that could be an opportunity. Espresso is triggering. Let's see, have a look. The espresso is an approach where you take the 5-minute range just before the market opens. So we define that as 27, high and 104 low. And then you add 17, 18 points. That takes you for a long position at 46 with a resting order, or a short position at 25.086 with a resting short order. Stop loss tends to be a fixed amount. Maybe 40 points, maybe even 80 points. And take profit tends to be a fixed amount as well. Right, I just need to relaunch my FTSE position for my other screen. So I hope it doesn't bother you that I swap between the FTSE and the DAX. We're getting a new version which will actually allow to have a double display of charts. I think that's could be incredibly beneficial. So we were talking about the espresso. You bracket the last bar before the open. Today that's 127 high and 104 low. And then you simply add a buy order 17 points above, and you add a sell order 17 points below the low. So 17 points above the high and 17 points below the low. And then you hope for a momentum move whilst you try and manage moving the stop loss down as quickly as possible. And the approach, depending on volatility, should be active for approximately 3 1-minute bars. So about 3 minutes into the session, that's it. You're kind of done. I'm just going to check if there's any comment, because usually that's when I hear that, okay, somebody's saying Divergent is not working, but there's only one person, so I'm going to conclude that it is in fact working, because usually if it's not working, then I get 100 messages saying it's not working. So I think what I'll do is post this chart in Espresso Explained. There we go. So I'm going to delete these drawings and start afresh. Espresso to the downside did not work. You'll hear me eat a little bit in the background. Also, full disclosure, but I'm semi-naked trading today. Just so you know. Don't think you need to know that, but now you do know that. Early going suggests a range-bound trading action. We are still within the confines of the overnight market. Interestingly, I'm doing some research on the overnight market and its impact I'll perhaps show you a chart here. So this is from something I've been writing on. This is a chart of the FTSE 100. And if you purely look at the shall we say the pink area, yeah, you'll notice. So if you sort of don't look at this, just remove it temporarily. Don't look at this. You go, okay, market rallied. Obviously, there would be some previous day, but the market rallied and then it fell hard and then it rallied again. But if you then contextualize it with the overnight range, you say, well, okay, what it did was it went above the overnight high and sought out the liquidity up there, or I would say ran stop losses and triggered orders, and then it did the same down here. So what my research is aimed at is how often can we expect this? Incidentally, a colleague of mine, somebody I like very much, called Tim Fairweather, he was talking about it at the event in Macau, and he's saying, and I really wish I could get him to say it himself, but I think he said, if I get the percentage right, I think he said that 60% of the time, which is, relatively significant, 60% of the time, and I think he was referencing another market than the FTSE, the market would test the highs and the lows of the overnight session within the regular trading hour. So that obviously you could argue, well, that's a range-bound market. Well, yeah, that's one way of looking at it. There you go. So we came up right to the trigger point of the other espresso level. Not that the espresso level is then really valid after the first 3 minutes, although you could, and I do, say, oh, well, you know what, it still break out. But we didn't break out. So what we will do is we'll draw a simple retracement level, and we'll just make a note of this area here, 25,110. 25,110, and I had to reset all my, so I'll just put that here. 50%. So now we have a reference in the DAX. I don't know if you saw the Nasdaq yesterday. I did manage to trade it. I'd love to show you something which may or may not be useful for you. So the Nasdaq yesterday had it came out of the gates, storming out of the gates, and it had a very volatile open, big push down. And I started buying. I can show you later where I started buying, but I noticed that the candle on the first 5-minute candle was 170 points. So I thought maybe we're going to get another measured move. If you can go this far down and be so overtly negative as it was, then it's probably going to probe in the same direction by an equal amount. So I drew a line here. Do you see that 649? That was my target, and that was basically based on sort of a rough hand-drawn idea that we will probably go in the opposite direction. In the end, we overshot a little bit, but it was a pretty good objective because it allowed me just to add a bit more on the way up, which you know I do like to add to my winning trades, never to my losers. So I measured the length from here to here, and then I measured the same up, and I used that as a target. There you go. Just get rid of that because it's not Nasdaq time. So the FTSE is trading above the overnight range. I realized that I haven't got numbers on. As I said, I had to reset everything. So now there's numbers on. Sorry about that. That allows me to it allows me to talk about charts, individual candles, and then we all know what I'm talking about. So what has been interesting about, no, let me start that sentence again. I don't want to say what has been interesting. What has been a fact is that Tuesday was a very significant losing day in the DAX. And so I used my my price behavior machine, and I found what Fridays look like on those days where Tuesday had been a really weak day. You know, so to this end, I will need to make use of e-signal. So, for example, just need to take a screenshot of this presentation mode, enable laser pointer, hide candle numbers, show drawing time. Just give me a screenshot. How do I get the screenshot? There we go. So, for example, the 3rd of March 2026 was a significant week Tuesday. So if we go to the 3rd of March, which we have here, let me show you. If we go to the 3rd of March, so there's the week Tuesday. What I was then interested in being Friday, hey, what did that Friday look like? And that's what we got here. From this point here to this point here. So I'm not in a rush to commit to a position because I am thinking, okay, let the market actually tip its hand. Another very weak Tuesday was the 18th of November. So let's find the 18th of November. We have it right here. So here's the 17th of November. So that's, so if we split this up, so this is Friday, this is Monday, and this is Tuesday. So you see it's a very weak Tuesday. If we then go over to the Friday, which is here, Well, on that particular Friday, we have a gap down, but a range bound up, down, up, down. So basically a range bound all day. So for me, looking at that old price behavior make me think, okay, I quite like to be just traditionally following the school run, or maybe a break of the first 15. I was tempted to actually go long. I admit that, but that was more a, shall we say, a gut feel rather than being a, oh, I desperately want to be in the market. So it looks as if the DAX is trying to get a rally going. And this red box here, that describes the overnight range. I could just use my software here that allows me to do the overnight range. And then it would look something like this. There you go. So that's the overnight range. And I like that kit, but at the same time, sometimes I'm finding it a little distracting to have it, and then I just disable it. So if you want to have the DAX contextualized in terms of the entire week, then basis on the cash market, today being the 10th, you have it looks like this. There's Monday. Put that in here, Monday. And then Tuesday. And then Wednesday. And then Thursday. That sort of gives you an idea what we are dealing with price action wise throughout the week. And then we got Friday, which is the big question. What do we do now? And so Monday was a trend day up until the US opened and then reversed. Tuesday was just a significant trend day, open at the highs, close at the lows. Beautiful day to trade if you love trends. May not be so easy, maybe very difficult to believe that you can sell short down here. I guess that's part of the trader's equation, part of the trader's training is to be able to do that. Wednesday, big gap down, and then an even further push down. Bloody hell, somebody killed that dog. Sorry about that. Love dogs as long as they don't bark. And sort of saw a low down here. You can see that 24/7 was marked as a potential for me. Didn't quite reach it. And then a retest on the Thursday gap low. And so it's probably not completely unrealistic to expect a high. You'll see that the DAX is currently trading at 25,163. If I mark that in, close enough. Then in the framework where we are in the big scheme of things, if I sort of just drew a simple retracement, then you can see sort of roughly what the levels are. You have the halfway point, the 50% is 364, which is a couple of hundred points from here. And so, of course, Friday has the potential, if it really wants to rally, then it does have the potential to do so. if you're sat thinking, oh my God, I really want to be in, one thing you could do is you go to a 1 minute chart and you measure the extent of the retracements. You say, okay, the first retracement that I can really sort of make out on the chart is about 26 points. So somewhere between 20 and 30 points. So there you go, 26 points. So if we drew a line from the current high and we extended that down by 26 points, it meant, hey, I'd like to be a buyer around 140. We're currently trading at 160. Another thing you could do is you can say, you know what, I'm going to split my trading size up in two. I usually trade 10 lots, and I'm going to trade buy 5 here at 60. And if I do get an opportunity to buy more at 40, I'll do so. Is that adding to a losing trade? Technically, I guess it is, but you have a preconceived plan, and you perhaps favor scaling in because you see a framework for higher prices, but you don't fancy missing it. We are 24 minutes into the session, and we are clearly breaking above the overnight high. I would like to be a buyer. I think I said that. This is not the kind of service where I tell you that I bought 5 minutes ago. I would never do that to you. Here, there's just full transparency. You will see what I do and when I do it, and that's that. So, you know, perhaps I'm feeling the same kind of, oh God, come on, give me an opportunity. If you really are going to rally, allow me to rally with you. FTSE, on the other hand, is showing a different kind of behavior. I'm going to remove this 50% note and going to remove this as well. Feels like the DAX is just grinding higher. I don't know if you... I think I like to just buy it at market with a smaller stake size than I normally would. And then I will allow myself the opportunity to buy a little bit more. Am I adding to a loser? Technically, but my normal stake size is 30. And I'm thinking, if this just runs and runs and doesn't really give me an opportunity, then justifiably here and arguably, I've simply just been a buyer above prior bar high. I got the way I interpret the chart, and let me just show you the position just so you know. The way I interpret the chart is you got a bear bar 1, which is attempting to do something, but it's not really achieving its objective at all. It's not like it's trapping out bulls or bears. It goes down to the low that was set just 1 hour before the market opened, which is, you know, traditionally is where we, in the old days, is that okay, that's where the market sort of got ready for the real session. And we tested that. That was down at 79, which coincided with the espresso. Then we have a bull close 2, and from then onwards, it's just been building. The highest retracement we have so far is 25 points, and that was from this high here to this low here. And that sort of gives us a sense of the structure. Over in the FTSE, we got a first bar negative, and that is now being retested. So now I am buying full blown, normal size, the FTSE, and I'll just post that in Telegram. So that's an entry at 104.84, 104.84.1. And I'll have a stop loss at 104.54.1. So the reason why I bought the FTSE is because this is what we call a first bar negative. And the first bar negative is when I buy the low below the low. This bar there annoys me. When I want to be a buyer below the low of the first bar when it's negative, because from a historical point of view, that has good odds of working. So I got two positions going here, none of which is really doing anything. The DAX seemed to get close to that point where we could have considered a buying a retracement. From the highs down to the lows, we retraced 21 points. Not quite 25 points. I can keep an eye on my trading ticket price here. I'm long from 84. We're currently trading at 83. Okay, so the DAX is breaking out, and we're now triggering what's called a school run. In school run, you actually see, this happens very rarely, but you see there's a little bit of a gap there. Tiny. So this is a school run long. So I'm just going to buy at market. Don't have much of a choice. School run triggered at the high. Let me clear up all these lines. So do you see this bar here? This is the second 15-minute bar, 15-minute chart, second one. Okay, obviously I can't do that because I just opted to hide all my lines. The high of the second 15-minute bar was about 68. And that's why I bought. I should have bought at 68, but you see the market actually jumped just as that 15-minute bar closed. As a result, I didn't get a fill at 70 and I had to settle for 74. It happens. FTSE is not doing much. That always concerns me when the FTSE is not doing much and the DAX is rallying. I'm not saying that the two move in harmony, but what I am arguing is that often if you see a bullish sentiment in one country, it will spill over to another country. It's that rough rule of thumb. It's not a trading rule. It's more like a, shall we say, a sentiment rule. I'm going to reduce my stake size in the FTSE down from 100 to 25 for no other reason than the FTSE doesn't act in a way that makes me think, oh, big movement coming. So essentially I cut 75% of the position at a break-even entry, meaning I'm only long 25%. Let me just explain that on Telegram. You may say, why didn't you just cut all of it? Well, I don't have a crystal ball. If I did, I would have closed it all and gone 40,000% short. Let me show you the overnight range. You see the overnight range in the FTSE is actually quite a lot lower. Incidentally, right where my stop loss is. So there's my account, not really doing much, losing in the FTSE, making in the DAX. So I'm now down where I'm trading the 1 minute chart because I want to add to it. But look at this last retracement. Did it get down to 25? No, it didn't. 21. So it's not like the market has to do something. These are just cues. So if I take the current high and I count downward by about 17 points, so maybe I want to be adding to my long position here at 73, which technically I can't do because then I would be adding to a losing trade. Can't really add that. My breakfast this morning consists of a pot of quark. Quark is a sort of a cheese yogurt, higher in protein, no fat, very little carbs. That provides me with approximately 40 grams of protein. And then I mix some fresh organic blueberries in. And then, and this is going to be the real kicker for you, I then add about 25 grams of denatured brewer's yeast. And what that does is provide a whole range of amino acids and vitamin B in various sorts, including B12, plus also a good dose of fiber and a good dose of protein. So overall, the meal is approximately 50 odd grams of protein. Calorie wise, probably not more than about 400 calories. Fat, negligible. Carbs, well, there's the blueberries. There you go. And I'm still sat semi-naked. In case any of you were curious if I had actually migrated to put on trousers. Now, I could have been a buyer at 73, but I felt that because you're looking over my shoulders, I would have had to answer the question, why am I adding to a losing trade because I bought here at 74? So I suppose technically I could have bought at 75, but the idea is that I would like to be a buyer. It might be a slow burn, a slow grind, but it does feel as if the DAX wants to move higher. The line in the sand for me is the gap fill, which incidentally is the second 15-minute bar low, which is at 118. I'm trading smaller size than I normally would. Why? Well, because I decided just to scale in at market down at 64. Which is here. Something tells me that perhaps I should ooh, funky. I'm gonna buy again at 80. I just put an order in. Here, 80. And soon I will manage the entries by moving stop loss up. I may not get a fill at 80, but the order is there. It's not entirely random why I picked 80. It is the body low of candle 8. The alternative is just to buy at market. Just as a reference point, I think I'll just buy 1. Just so you have it as a reference. So that's me buying the absolute high of the day. But just as a reference point. Still a position, but just 1 lot. So am I going to get a fill here? Yep, I am. Nope. There we go. Filled now at 64, 74, and 79. Now let's look at the size of the retracement. Anything I should worry about? Well, the retracement is just 20 points. That's still less than the biggest retracement that we had so far. If we begin to trade below 70, then things might look a little different. So the third 15-minute candle, candle 3, is now a clear doji. And I wonder if, with 1 minute to go, what the bulls are going to do about this, because that could set up a trap for them. If I draw a retracement of the current price action, you'll see that the 50% retracement is about 36 down here. I think I would like to move my stop losses up to about here. So now I've moved my stop losses, pretty much all of them, to around 25,111. So far bar 9 is quite a significant reversal bar on a 5-minute. And all my positions are now underwater. Those positions now add up to a full position. And my average entry is at 73, which incidentally is about where School Run triggered. School Run would have triggered at 68 plus 2, so about 70. We're currently trading at 56, 55. So, but bar 9 is a concerning bar for the bulls because it closed at its lows. Just wanted to take a look at the bigger picture, saying, well, is there anything here that could trigger such a reaction? Well, you get up to the high of the second hour high from what would be Tuesday. And we're taking out the range. And let me show you my account, currently losing about $1,100. And the FTSE not doing anything. So that trending move that I was hoping for, like a trend day perhaps, turns out that the ghost of Tuesday and Monday so far has been too much for the bulls to be fully committed. And we are down now at the 50% retracement, which is at 36. I am long, and at this point, wrong. School Run short triggers now, so if that is the case, I will close and I will go short. So that is now triggering and I need to go short. On a School Run, let me clear up the chart so you can see that better. School Run triggered long up here and I had to sort of stagger into that position. But now we have triggered short. The entry should be 119. Mine is 15 and 13. Not great. And I'm now actually in a little shorter than my normal stake size would dictate. But there you go. So we look at Tuesday, the 3rd of March. And then we look at, so this is the 3rd of March. Then we look at, well, what happened on the Friday, which would be this day here. On this particular day, we rallied off the open, slightly gap up. But then about an hour into the session, 45 minutes into the session, we began a reversal. And then retracement, and then basically just going down until the US Open. And a move of approximately nearly 3%. From high to low. $700 points. From 24,100 to 23,400. So that sort of contextualizes the decision to go from long to short. Has happened before. After an incredibly weak Tuesday, Wednesday and Thursday, attempted to rally. Didn't have much luck. And then Friday, slight gap up. Fails by the bulls to push higher. Trading below the open. And then trading lower. We haven't quite traded through the low yet, bar one, if that was to happen. You may see some short covering. But if you begin to trade significantly below bar one low, and by significantly, you have to gauge the momentum, then it's not completely out of the realms of possibility that we're going to see something like we saw here. Now, market, of course, never repeats exactly. But if we look at this, then we have an attempt to rally, about 100 points. And then we go about the double in the opposite direction. Then we have a retracement, a deep one, about the size of the initial rally. And then the really big push down, the second wave, came after 10 o'clock. And then another retracement, this time the same as the previous, 140 versus 146. And then another equal wave down. So you have down 200, 180, down 330, and another 330 and retracement. See, that's the harmony that I'm always so particularly fascinated by. Dow is still being called higher, but the Nasdaq is being called lower. So here's a chart of the price action today. We're currently trading at 25,096. That's here. So you can see we're getting precariously close to the opening low. We rallied 120 points. If you do that in the opposite direction, and you about double it, or you can even just go as a measured move, that would take you down below and close to around 24,000. 940. You know, and considering we're currently trading at 25,100, that's a fair amount of downside, but let's not get too carried away here. I'm not the only one who has this data, I'm sure. And it could simply just be a retest of the lows by stepping in around 25,076. If you want to see how the third actually looked like on a 5-minute chart, it's not the third, it's the 6. So here it is. You know, the retracements are significant, 50 points. It seems as if the acceleration came here around the 1 hour mark. Let me mark out the 1 hour mark, that's here. Whilst of course we're already sort of down here in this area. But so far the DAX is holding 25,100. What's ironic here is that the FTSE is completely unfazed by the DAX. And so if the FTSE was to trade back above my entry point at 104.84, I would add to my position. So far the bulls have been stepping in near the lows, not quite the lows, but near the lows. There's another 17 points down to the actual low. And this obviously contrasts with what we're seeing here. Here we're not seeing on the 6 such a strong bounce. So it's an incredibly weak candle 5 on the 10-minute chart. But I don't particularly want to have a stop loss all the way up here. Okay, so I am now adding to the FTSE. I'm going to add again in the FTSE. And I think I'm wrong in the DAX. I'm going to put my stop loss here, which is the school run original long entry. So I'll move my stop loss to 68. Maybe it's time to be a little more aggressive in the FTSE. So bar 7 on the 10-minute chart, which would be bar 13 on the 5-minute chart. Obviously, there's still a minute to go, but it could certainly create a bull trap, trapping the bulls. But we will need to see follow through below 13. I'm buying some more in the FTSE. It seems to all of a sudden have found some strength. I want to see the FTSE on that day where the DAX declined so much that Friday. So here's the see the FTSE there is declining with so there's the 3rd of March here. FTSE declines with it, then bounces on the 4th and the 5th, and then on the 6th on the Friday, where the FTSE does exactly what the DAX is doing, pushes off the open and then trades lower on a beautiful trend day. But we're seeing exactly the opposite today. We're seeing the FTSE actually now pushing higher. I'm going to play it a little conservatively and get rid of some of my DAX, reducing my position significantly and moving my stop loss above bar 10. So I've closed much of my DAX position now. Just bear with me 1 second. So I was stopped out of the DAX. I'm going to buy the DAX again. Wow, it's flying now. Filled at 67. Feels like momentum has turned now. You could argue, okay, we had a school run long, then had a school run short, and now we're triggering the school run long again. Not ideal price action. And obviously I don't have to do anything about it either if I didn't want to. bar 14 closes above high of 13 and high of bar 10, I would expect to push up towards 25,200. Still need a stop loss for this though. 25,067. DAX doesn't quite have the same oomph in it as the FTSE does, which is ironic because it was the FTSE that no one wanted to own. 20 minutes ago, nobody wanted the FTSE. Now everybody wants the FTSE. But the bears are still they're not giving up. They see this as a range bound, so they're selling into it. I'm adding to my FTSE here at 94. Excuse me. Excuse me. Not seeing any desire for momentum in the DAX. If the bulls can't pull through on 11, 12, 13, and 14, the bears are going to punish them. And the same in the FTSE, which is now losing me. So still range bound. Not any deep commitment. This movement from 11 to 12 to 15 seems too deep to be just a retracement before we are resuming the downside. So I'm expecting a retest of the 67 area. But if this really was a breakout mode, and it goes a little quicker than this, of course, just because I'm long doesn't mean that the market immediately has to obey my wish. So I'm long from 84, 86, 93, 97, and again 94. I'm justifying adding at 94, even though I added at 97, is that overall the position was in profit. We were approximately 5 points from the high of the day. I tell you what, the longer we just sit here and linger, the more it opens for the bulls to give up. Because it took the bulls 8 bars to wipe what the and the bears wiped that in 3 bars. So to me, the bears have got the upper hand, and that's just a bit of unsubstantiated pocket statistics. Bar 1 to bar 8 takes us from low to high, and bar 9 from bar 11 takes us from high back to low. There's certainly more force. The bulls gave up mighty quick. And 167 is significant because that is the breakout of the second 15 bar. That's exactly where I added, and I re-entered, and that's exactly where the bears actually had the upper hand. And rightfully so, sold short. acknowledging that this is a trading range. If you look at it from a 30-minute chart, you'll perhaps get a clearer vision of it. They sold right at the cusp of where the bodies realigned there. That's where they sold short. Whilst I saw it as breakout school run, and now we are back down to the low end, and I won't re-enter the short side. I think that would be dangerous for me, because I am sort of the kind of trader that bets on breakouts as opposed to betting on trading range behavior. So, of course, we all read price action differently. Bar 7 is a strong bull bar. Take us up to the high end of the range. We're closing this particular 5-minute bar in 2 minutes. And we are going down to the lows. And the same in the FTSE. So, ouch. Ouch and damn. That's costing me. Now I just gotta have faith that it is indeed trading range behavior. That, of course, means being patient. You could see why the DAX could bounce at 17 low, which is 11 low, trading range behavior, bears covering, bulls buying, anticipating a new push back up towards 15 high. As you can see, every single one of my core positions are now losing. And here's the naked chart. Is the FTSE range bound as well? Well, time will tell. Certainly not feeling very positive about it now. Dow's being called up, Nasdaq being called down. So on the 10-minute bar 7 is where the FTSE bulls have to step in. If you were bullish, which I was, on the basis of the reversal of the low of 4 on the 15, you got to be a little discouraged by the idea that we are retracing the entire push higher. You see it much clearer perhaps on a 1 minute chart. You can turn it on its head. Would I want to be short? No. Would I want to be short the DAX? No, I wouldn't. It feels like a trading range behavior now, and we are at the low end of the range. And so far the bulls are stepping in the DAX at 13 low. And that pattern, well, if it is trading range, we'll be going back up to 10,500. But I can't completely shake that thought of, hey, what if the 6th of March is playing itself out? How would I deal with that? Would I retreat and lick my wounds, or would I jump on board? You see, the idea on the 6th is that if you had been long, let me just get rid of the price ruler and then make this a little less thick and a better color. On the 6th of March, if you had been, okay, now it was perhaps if you had been long, you at least would say, okay, well, look, it broke below the low and now it's retesting it. So there was very little ambiguity, and the bounce was nowhere near as strong as what we just seen in the DAX, which was all the way up here. So from a comparison point of view, they're not comparable. But from a price action point of view, you're thinking, well, that is a bloody deep retracement for a bullish move. So either we got a complete bull trap here and we are headed much lower, or more likely we are in a trading range and they're just probing the low end of the range and trying to catch out as many bulls as possible. So I'd much rather trade something like this. But I don't get to pick and choose. I just to get to reap the reward or pay the reaper. All right, let me take a question. Hi, sir. I have a stupid question. That's not a good start, though, is it? To put yourself down like that. Hi, sir. I have a stupid question. It's not stupid, but there you go. Can we just roughly calculate that on average, when do we move stop loss to break even? Like after how many points roughly in profit should we see before moving stop loss to break even on DAX and FTSE and USA indices? I'm I'm asking this because I've always been struggling with break even. I've always been so conservative with my break even. I always do it very early and end up missing a good move. It would be great if you can address us a little bit. Okay, well, look, moving a stop loss to break even is entirely your prerogative. When you move a stop loss to break even, do you move that stop loss to break even because of the chart and the price action, or are you moving it because of yourself? Because those are two different things. So if you move it, the move stop loss to break even, fine, you have the benefit of having no more risk. But it may not be the best thing to do from a chart point of view. And so you have to differentiate the two. And only you can address that. You know, it's very well that I say I would do this or I would do that. But the heart of the matter is, when you move a stop loss to break even, that is a decision based on emotions as opposed to a chart point of view. For example, if I had moved my stop loss to break even in the FTSE, yeah, I would have had the benefit of not sitting on this drawdown. But from a chart point of view, there's nothing really here to suggest that we couldn't go back up again. And that's the difference. Okay. Mohammed is saying, is the DAX not doing what he did yesterday? Maybe so. What did he do yesterday? Sorry, just teasing you. Also, I think that it should be a she. Is DAX doing what it did yesterday? It had a gap up and then immediately down and then up. So no, I would say it's doing the very opposite. It started high and then basically the higher of the day was in the first, on the first bar, if you know that it actually managed to rally towards the end. And then you had a retracement. And then second leg down. Here, today, you can see that we started gap down and then we rallied. Okay, is there any more? All right. And then somebody saying, hi Tom, why you guys don't use TradingView accurate data from the exchange of NYSE and get German 40, etc. You and Tom can afford premium plan. What do you mean accurate data? What do you think we are trading on here? Inaccurate data? We're trading the real market prices. What a weird question. I mean, chart look more good. What do you mean chart look more good? You can design your chart however you want. You just go to settings and you can have whatever. You can have night theme, you can have day theme, you can design how you want it. Strange. Okay, someone is saying, how you can handle your mental in this situation? You guys might want to just attempt a Google Translate. I understand that English might not be your first language, but English is not my first language either. Anyway, so this guy here saying, how you can handle your mental in this situation, question mark, tears, tears, tears emoticon. Right. Well, I guess you just do, or you get out. I don't think there's much choice. Either you can withstand the pressure and you just do so, or you decide for yourself that you can't. It really is your decision. So back to the guy who says that my charts look not more good. From bar replay, you can analysis and analysis. From bar replay, you can analysis. Bloody hell. No, we're rolling out the heavy English users today. Yeah, I have the same function in eSignal, which is a professional trading package. So here I can do replay. You know, I have the same function as you have. There we go. Okay, thank you. Right, seems like there's no... Well, so someone's saying here, hi Tom, hope you're well. I have a question. You use to teach us harmonic retracements. So here in the DAX 5-minute chart, after the big move down, we saw a retracement by 11 to 15, expecting another move down. Well, quite possibly that this is just a retracement, and then we will see another move down, which perhaps would take us down here. But reading the chart in the context, we are in a trading range. I'm beginning to think that we're not in a trading range in the FTSE because we're testing the lows of the day, and I'm going to begin to get stopped out now, and I'm losing quite a lot of money, nearly $10,000. All right, that is the questions. So I got a tad bullish up here at bar 14. As a trader, and when you're sat with a loss, you sit there and think, should I have seen that reversal at bar 15? Should I have been out sooner? should I not have been pressing the winner so hard? Which I suppose is a good thing to have some sort of an audit filter, isn't it? If you are in doubt what kind of market environment we're in, just look at the 15-minute chart. Or even better, look at the 30-minute chart. Then there can be absolutely no doubt that we are in a trading range. So I have a question here. What is your confirmation that a trading range is broken? Sweeps of lows to go higher and vice versa? Well, uh, it could be more than one thing. So for example, if we argued this was the trading range, then we take out the lows, but we close above the high of the lowest bar. So you see how bar 12 is closing above the high of bar 11. So that's one way of making an argument that the trading range has done what it needed to do. Where it gets a little more tricky, trading range, then we take out the lows, but we close above the high of the lowest bar. So you see how bar 12 is closing above the high of bar 11. So that's one way of making an argument that the trading range has done what it needed to do. FTSE sat right at the flat line. That orange line there, that's the closing price. And the DAX, well, excuse me, I need to sneeze. The DAX is trading a little below the flat line. We closed at 118 yesterday, and we are currently trading at 88. So I was betting on a bull breakout, didn't happen. Then I was betting on a bear breakout, didn't happen. In fairness, I was in profit on both, but hey, just because you were in profit, but you didn't, you're only as good as your last victory, right? So that's the beauty of this game, is that you're judged on what you bring home to your account, as opposed to, well, I analyzed it right. Yeah, good for you. But you didn't make any money. You lost. Would love to show you a chart of something that I was writing on earlier today. So this is the FTSE. So the regular trading market is what you see inside the pink box. And if you just looked at that, and I know we already spoke about it, well, then it just looks like, yeah. But in this context, somebody asked me, what is it that happens before the market opens? Well, that's the overnight market. And so the overnight market is a market that is quantified by less volume, whilst what's going on in the pink market is when the regular stock market is actually open. So we're breaking to new lows in the DAX and in the FTSE, and I am unfortunately on the wrong side of the market. And while we still look like we're on a trading range in the DAX, there is a chance I'm going to be stopped out. Here's the state of my account. I'm currently losing £12,000, so it's quite a big loss. And so far, that elusive trading range behavior hasn't been coming. We have just been going down non-stop since bar 15. And the DAX has also got the better of me since bar 15. We've been trading lower. When we broke to the upside, I actually bought at 67, and you will see that that is pretty much the high of the secondary move. The bears, they immediately, much better than I did, acknowledged that this was a trading range behavior basis on the first and the second 30-minute chart, and they sold right at the body high. I've been slow to take my loss, and I'm going to have to pay for that. Hi Tom, your stop loss is 100 points above. What are you risking per trade? What would you lose if it hit the stop loss? Well, if I'm trading $100 and if I have a stop loss of 100, then it would be $10,000. My risk here in the FTSE is 25 points at 100, so it's $2,500. I've already been stopped out on one, as you can see that, so that lost me $2,500, and we're currently trading at 68. My stop loss is at 64, 63, and 56. And in the DAX, I'm trading 30 with a 100-point stop loss, so I'm risking $3,000 per entry. Hi Tom, I hope you feel good. I wanted to know, do you look at the S&P 500 during the European session, or do you only look at the price action? I only look at the price action from the DAX and the FTSE. Hi my friend, you don't look on diagonal trend line example flags. Well, I'm not sure what you're referring to. It could be, it's always possible to draw lots of lines. I'm interpreting this as a trading range, but you gotta have a stop loss at some point, even if you're betting on the market reversing back into the trading range. I'm not the greatest fan of drawing lots and lots of lines on my chart. It strikes me as somewhat, I don't know. Not sure what the right word I want to use. Sure, I could start talking about wedges, whether one push higher, second push higher, third push higher. But so in that sense, you could argue, well, this is in the retest. Yeah, no, fair enough. But this takes place during the outside hours. So if I just look at the inside hours, I'm just dealing with this. Yeah. Okay, so yeah, I appreciate that you can draw lots of lines on charts, pennants, wedges, flags, bull flag, bear flag. I think I see them without drawing them. So somebody has asked me here, hi Tom, sorry for my broken English, but I've seen some of your older videos and the question you kept asking is, what if I had bought the market? How would I have reacted? And my question is, what if you'd sold the market? Well, if I had been fortunate enough to and acknowledged it, I obviously would have added and added and added and added, and then I would have highly likely taken profit down at the lows of the day. Oh yeah, my stop loss at the moment is 30. It should really be 25, but it might just have saved me. But I've been stopped out of 2 of my 4 positions. Thank you, Enk. Somebody's saying, I'm finding it very difficult to download your software to my account, my TradeNation account. Could you please steer me in the right direction? Steer, I think is what you're looking for. Good to see you back. Thank you. You are welcome, KC. There is a group called the Trade from Chart group. And you know what? I can post the link to that somewhere more. Add users, there we go. Well, I'm going to keep these positions open. Just realized I've also been stopped out of the DAX. That was a poor place to have my stop loss. That's the annoying bit about having an arbitrary fixed stop loss. I need to adjust that. I should not have been stopped out, but I am, and that is what I'm going to have to accept. I think this will then be a good time to finish today's stream, and then I will post my entries. And then I'll see you for the US session. Thanks a lot for this morning. It wasn't exactly the kind of morning I would have liked to return to, but it is what it is. Okay, I will see you later. Stay strong. Bye-bye.